Investor fears have spiked amid high inflation, recession concerns, and bank failures. 1 in 3 investors now expect markets to drop 10% in the next 3 months, according to Investopedia's latest investor sentiment survey. For more, let's welcome back Fast Money friend and Investopedia editor-in-chief, Caleb Silver. Caleb, good to have you with us.
Good to be here.
It feels like since the last time we talked, which is about a month ago, right after the bank failure started, there's a real change in sentiment amongst investors.
Absolutely. They're playing a lot more defense. We know defense wins championships, but you got to score too. There's been a little rally going on. I know it's been choppy lately, but the headlines are really scaring investors, whether it's banks, whether it's inflation, whether it's the debt ceiling. All these things are putting investors back on their heels, and they're not that committed right now. 56% say they're worried about it. You mentioned 1 in 3 expect the market to fall 10% in the next 3 months. 37% are investing less lately. That's more than a third. These are active investors, as you know, at Investopedia, and the fact that they don't want to play right now is interesting.
Yeah, a lot of them have started bank accounts in order to get high-yield savings. I mean, that's where their head's at right now.
Yeah, even though they've lost some trust in financial institutions, given what's happened, they are putting their money in high-yield savings accounts. They're looking for money market funds, money market accounts, and CDs, which were popular when we spoke about 6 weeks ago. Super popular again today. One of the top searches always on Investopedia. What are the best CD rates right now?
And I love the question, where would you put an extra $10,000 right now? Because traditionally, it's been like Apple, Microsoft, like the big ones, but not this time. This time it's CD.
Yes, CD is actually equaling individual stocks and the big stocks for the first time since we ever ran this survey. They want that guaranteed yield right now. Stocks feel a little slippery. Stocks feel a little bit scary. There's a lot of headline risk, as we mentioned, so they've been putting their money in the bank and in CDs.
How long have you been doing this survey at Investopedia?
Just right around when the pandemic broke, so I guess 3 years ago, we started surveying investors because that's when the fear factor started rising to the extreme. So we do this every 8 weeks, and we've been watching this wax and wane of this either fear or this greed, depending on what's going on. Right now, it really feels like they're back on their heels playing defense.
Can you give us context in terms of, how, I don't want to say panicked, but how cautious investors are compared to past periods? Yeah,
well, if you go all the way back to March, April, and May of 2020, extremely worried back then. But right now, they're just cautious, but also not active. You can be cautious and want to do something about it, and that's kind of where they were 2 months, 4 months ago. Right now, they're cautious and not really willing to do a whole lot with their portfolios.
Caleb, the market always climbs a wall of worry. We've all heard that saying. Is this something is there a lag effect between the worry, in your opinion, obviously it's a 3-year control group here, but in your opinion, are we going to see the worry up front here? Is that a lagging effect? Do you have any opinion on that whatsoever?
Yeah, I do think it's one of those lagging effects. And I think if we get a rally, you think a lot of these individual investors want to play. They are looking for a reason to believe, to quote the boss. So they want to put money to work. They just haven't had the opportunity. And now there are real alternatives. We went from Tina to Tara. They're putting their money where they think it's safe, even in the bank, even though they've lost that trust in a lot of banking institutions.
Yeah, Dan, what do you make of this not doing anything? I mean, I think that's fascinating. These active investors are not doing it.
I love the sentiment stuff because I do think that the active nature of the people that are going to engage in that. I mean, give us a sense, like over the last couple of years, we talk about some of these bubbles. I mean, does it get as granular as, like, do you remember a year and a half ago in 2021 where people talking about that extra 10 grand would go into NFTs or crypto and stuff like that? Does it get like that?
Absolutely. And you'd think they might want to put a little bit of money in crypto given the rally right now. So yes, these are individual investors who track manias. They track manias like Bitcoin, like cryptocurrencies, like cannabis stocks, when those were hot, like meme stocks. But right now, if you look at the list of the top 10 stocks, which we do all the time, they're the biggest 10 stocks in the market, plus a little intel, which I thought was interesting this time around as well, given the results. But still, playing it safe with the home cooking and now putting money in a safe place, the bank.